This is your fix.
I'm your host, Stassi Schroeder. Welcome to Tell Me Lies, the official podcast. What's the most unhinged thing of season 3?
Steven, because he's so evil.
I do think he is misunderstood.
You see everyone face consequences.
It's intoxicating. The writers just know how to trick you.
There's always a twist in this show.
Tell Me Lies, the official podcast, January 6th, and stream the new season of Tell Me Lies, January 13th on Hulu and Hulu on Disney+.
Reality radio for a really great future. We're talking real money.
We, here at Talking Real Money, have always been big advocates of financial education. Heck, it's what we do and have done for literally decades. Tried to educate you about how money works and how you can make it work for you better. So we're always saying, yes, more financial education is better, particularly in schools, high school and college. Let's start young. Let's give them a solid financial education. It sounds like a no-brainer, a great thing across the board. Who knew we would have to qualify the darn thing? Hi, everybody. Welcome to Talking Real Money. I'm Don. That's Tom. We're here to financially educate you, but in a way that we believe is the right way. Who knew there was so much bad education going on when it comes to financial education?
Yeah, it turns out, by the way, there's now 30 states that have laws or regulations requiring that students complete a personal finance course. Now, here in Washington, they're still working out the course. I saw the panel on it. It's okay. 73% of public high school students will take a financial course by 2031, which I think is like 5 years from now. That's 3 out of 4. That's pretty good.
Pretty good. It's getting better, but the devil again is in those darn details.
Because it sounds so easy. Financial literacy, you got to, and I was invited to teach at a local university some of this, which I love because I really want to help young people. But this is a very lengthy article in the Wall Street Journal talking about this. So the first 3 or 4 paragraphs, you're like, this is great, blah, blah. And what's the first thing they go to about the specifics of the education? What's the first thing they talk about?
I don't know, but I'm going to guess because I did not read the article.
Take a guess.
I'm guessing it's stock picking contest.
Yep, it is.
I hate those so much.
It just teaches because it's not investing. So yeah, you put the money in for a period of time, see who did the best by the end of the year. So that teaches people to be traders, teaches people to think they can pick stocks, et cetera, et cetera. It's not good stuff. I won't mention the school where they interviewed. I was going to call the guy, the teacher.
He was hot. He was hot.
I was really mad. I was going to call him up, do an interview. And I thought, no, that's blind. And his heart probably in the right place. He's not. I looked him up. He doesn't work for Edward Jones.
No.
That's okay. So he's a math teacher who's trying to help people with investing. That's all fine. But I really do struggle with the stock picking because what happens is if you ever take that course, you take it and you think, aha, now. And by the way, if you're lucky and it works, you think, well, I know how to pick stocks. That's easy. I did that in high school. Or you think that's what investing looks like, which we can pretty well tell you it could, but it won't be a more successful approach is kind of buying the market and holding it. Not even a little,
now,
but
it's funny. I went to the Federal Reserve Board has published curriculums for teaching financial literacy. And when you get to the key investing principles part, this is from the Cleveland Federal Reserve.
Yes.
Day 1, teach the No Frills Money Skills video series, Growing Money, Paying and Receiving Interest. Then, tools for enhancing the stock market game, invest it forward, wealth creation. And then the next day, the stock market game. And then back to a video. So they're doing, even the Federal Reserve is doing this wrong. Yeah,
and to go back, I mean, before you even talk about investing, there's a whole bunch of other things. First of all, in my mind, you talk about money values. What's important about money? Why do you need money? How should it work in your life? Because I think some people spend way too much time on it and some people just don't pay attention to it at all. Then, again, it could be how and where to save money. right after you sort of establish where money fits. Compound interest is one that I think is a pretty basic concept that you really need to understand. That's a good one. Why different investments have paid differently over a long period of time. That's important. And then maybe taxes as a starting place.
And when it comes to, we should also teach about investing because there is scientific fact.
Indeed.
In fact,
Yeah.
in the Federal Reserve course, it says, stock market strategies. Are you an active or passive investor?
At least they recognize that difference.
Yeah, but are you an active or They are. See, what they're doing is they're implying that active is a strategy that actually holds
Right. Should be paid attention to.
academic water. It doesn't.
Yeah. Well, we can, those are just numbers are numbers. We can show you that from Spiva over the long haul. So yeah, I get pretty worked up. So we'll see what happens in the great state of Washington, right? And again,
I bet the stock market game will be part of it.
This gets into colleges as well, because you remember my son came home from his small school where he was taking the investing course. And I showed you this. He brought home what the curriculum was. And it was all about futures trading and options. And all. I said, I thought you guys were all going to be teachers and stuff. What? You're learning how to be a hedge fund manager or something? No, this is way wrong. I went to the dean, if you may remember.
I do recall. Yes.
This is baloney. And she said, yeah, the guy's been teaching for 20 years. He's retiring. Give him a break. He did retire.
I don't know that you used the word baloney, but maybe.
Something like that.
Possibly.
Anyway,
it was a family-friendly conversation, right?
And by the way, there's one other thing that every teenager should know. ROTH.
Oh, okay.
Every
teenager should know a Roth.
Because if you save something in a Roth after you have any employment at all, you will thank me in 40 years. I won't be here, but you'll be saying thank you,
and
Tom,
talk your grandparents and parents into a 529 plan that can become a Roth later.
Bingo.
855-935-TALK is our telephone number. We've got lines opening.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
This is what I do during breaks. I was reading through the Fed's outline, and then I went into some of the lesson plans. And
Shouldn't they be spending more time on interest rates or something? I don't know.
There's a chart in the the investing lesson plan. Yeah. And this is a very interesting chart because it has a list of investments on one side, and then it tells you what their risk is in another column.
What does it mean by risk?
They just rate it risk.
Oh, I see.
Okay, they have it's a 1 to 5 scale.
Okay. Riskiest being
so
5
cash,
or 1?
1 is the least risky.
Okay. So
they have cash.
1.
They have cash. The risk of cash is 2.
How could that be?
Because of theft.
I guess you can get it stolen.
Theft and
somebody
inflation.
can come over to your house and take it.
Wait.
Okay, sure. Okay.
Checking account, 1.
Wow. Yeah, okay.
Savings account, 1. Money market account, 1. CDs, 1. U.S. savings bonds, 1. Money market mutual funds, 2. U.S. Treasury bonds, 1. Corporate bonds, 2 to 4.
Treasury bond, 2 to 4.
2 to 4.
Treasury bonds going to have some volatility.
Yeah, I know. That was a terrible. This is the Federal Reserve, by the way, folks.
You might know better than that.
Anyway, no. Here's where it gets interesting. Growth stocks, 4 to 5. Okay, wait.
Sure. Yeah.
Hold on. Commodities,
Value.
4 to 5.
That's an outrage.
Collectibles, 4 to 5. Mutual funds, 2 to 4.
Okay, but it depends what the mutual fund owns.
I know. What if it owns one stock?
What if it's in the money market?
Right. But to assign a risk value to growth stocks that is the same as commodities or collectibles?
No comparison. So what you're
collectibles
really
are pure gambling.
Entirely. So what you're saying is, how can we expect to teach young people when we don't know ourselves? Is that what I'm getting from you?
That's what I'm talking about.
Wow.
Now, I did find something in the outline. Day 3 of the investment strategies course.
Day 3. We've already picked all our stocks. We've traded options. Yeah, what else?
This portion, quote, explains the efficient market hypothesis and how it might influence your investment decisions.
And let me hear your explanation of the efficient market hypothesis.
The efficient market hypothesis states that markets have all known information and therefore reflect all information that is known at that publicly known at that moment.
So there's no way to sort of be
No way to
ahead
beat the
of-
market at that
Right.
moment unless you have insider information.
Yeah.
That's it. Because the markets are efficient.
Or you made a guess, but yeah, okay.
Yeah. That's just that luck part. And they also have a section on 529s and how good those are.
Which they are good. Okay,
are good.
so but going, wow, needs a rewrite. But here's the thing, just to close this out, because you mentioned this right as we're going in the break. The 529 plan, which is a way to save for college, and high school education, is great because the money goes in after you pay tax on it, but then it grows tax-free if it comes out and is used for educational purposes. That's wonderful.
Or if it's used for a
I'm
Roth.
waiting for. Oh, I was going to say, go ahead.
Or 35,000
Can come out
can
and go
gradually
it's a
go
wonderful-
into the
yeah.
beneficiary's
I know.
Roth IRA.
It's amazing
with
So-
no tax. So basically what you're getting is like a contribution to a free contribution
Yeah.
to a tax-free forever
I know.
retirement.
and which I'm hoping to do for my youngest, but we'll see. But at any rate, as I said, all kidding aside, the Roth for a young person, if they put money in a Roth and it grows for 40 years tax-free, it's unimaginable what that will mean at retirement. It's just, you can't even, there hasn't been a generation which has had that circumstance. No way. So it's stupendous. It's
when
wonderful.
it comes
it's amazing.
to, by the way, let's just put this out there. We live in the best time ever for investing. We have more choices. We have more options. We have more information.
Yeah, no, that's true. But you have to be able to sort it out. There's a lot more information, and some of it's pretty bad.
And that's
as you
why
just stated.
we're
The
here.
collectibles and the large cap growth stocks.
Yeah, and by the way, if you have $35,000 in a Roth IRA
In a
and
Roth
you
IRA
leave
or
it there
529?
in a Roth IRA and you
okay.
leave it there for 40
how many
years.
years?
So that's from age
At what rate of
25
return?
to 65 at 10% a year, which is an equity portfolio.
Okay, that's good.
Yeah, an equity portfolio. It's aggressive.
okay.
I mean, equities have actually done that or a little better, but so let's do that. You would have
Wow.
how
much?
about $1.75 million just from that. Not saving another penny ever.
Tax
Free.
Remember, the stuff that's in your 401k, got to pay tax.
That's
Stuff in your
taxable.
IRA, got to pay tax. Stuff in your brokerage account, you want to sell stuff you made money on, got to pay tax. Roth, Wow.
So basically, that's that 529.
What'd you say? 1,750,000.
Yeah, that's that 529 plan.
That's crazy.
taken and put into a Roth over the 7 years.
7 years, right? Yeah, 7,000 each.
And
5 years.
And you just leave it alone. 5 years. You just leave it the heck alone.
Wow.
You have close to $2 million at age 65. Now, if you retire at 70, it's over $2 million.
Wait, there's people that work until 70? That's crazy
Yeah,
in and
there
of
are.
itself.
There are. I think I know one really, really well.
I'm just having a little fun there. So,
Yeah.
okay.
So
fair enough.
Anyway, that's the magical power of 529s.
Didn't I say something about learning the power of, what was it, compounding?
Yeah.
Kind of an important concept.
Kind of
You
important.
can see it there, big time.
Hey, just wanted to let all of you know, listening to the radio show, that calling is an option and it's free at 855-935-TALK right now.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Because, real money is, while you may think it's kind of out there on the fringes of life, it's actually the fuel for the whole darn thing. It's why we go to work. I mean, okay, yeah, that's probably the biggest reason why we go to work.
No, I go there
You
to
would
hassle
not
people
go.
when they
You
show
would
up.
not go if there was no paycheck. Would you go to the office if there was no paycheck? No, you would not.
No, that's true.
Yeah, it's the money.
Okay. I want to be paid.
Now, there's a pleasure that comes from work you enjoy.
Sometimes. Yeah, sure.
I qualified it with enjoy.
When other people show up.
That doesn't happen since
I'm
COVID.
using that at retirement.
That does not happen anymore since COVID. It's so
I'm
weird.
gonna say, who's that guy right? He works for you, sir. What?
He
No,
does.
anyway.
I don't recognize
seen
him.
him before.
And you're thinking you've got like dementia. It's like, how do I not know this person? 855-935-TALK. That is our telephone number. We will take your calls at our lovely Northwest News Radio Seattle studios that Tom and I never see. We don't even know what it looks like anymore. I hardly remember.
I do know what it looks like.
I've been there
It's
like
nice.
once.
Yeah, it's a beautiful place.
And I won't be there again this visit to Seattle because I got to do the show from Maidenpower.
Yeah, it's not a bad place either.
No, it's
Plus you get a
lovely.
free veggie sandwich to go.
I
with.
am not. I better have a roast
I already
beef.
set it aside. I
better have the darn roast
from
beef.
3 years
I'm telling
ago.
you. So give us a call,
Do you want me-
855-935-TALK, or send your questions in at talkingrealmoney.com. Preferably speak them into your microphone on your electronic device as opposed to typing them. But here's a tree killer for you right here in Tom's grubby little hands.
The war on trees continues. Ted from Cedro Woolley writes, when I want to withdraw money from a Vanguard retirement date fund 2030, how do I do that? And what would it cost?
Huh? You mean you just redeem however much money you want to, you go to, if it's at Vanguard, you go
It would be
online
how
and
many
you go.
shares? You have to figure out how many shares.
No,
you'd have
you
to
just
sell.
tell it a dollar amount. They'll do
that's your
fractional.
mutual fund. Pardon me. Yeah. Okay. That's right. Fractional. So,
They'll do
and
fractionals.
It costs nothing.
And it costs zero. There is
Now
no
that
cost.
said, if it's in a target date fund, I hope this is in a qualified like IRA type account. So now you have to consider the taxation.
No, he didn't
Right.
ask about it. He just asked how
I
to
know.
do
I'm
it.
just putting that out there because
Okay.
if you don't understand this, you might not understand that. So you might, and I tell this to most people, the smart thing under that circumstance is probably to have them withhold the 20%, just set it aside, give it to the government, then you don't even have to deal with it later.
If it's in a
I think it
taxable
makes sense.
account.
If it's a taxable.
Right.
No, you mean qualified, like.
I mean qualified. That's what I meant.
Yeah.
Non-taxable account.
But otherwise, no,
I
you just,
misspoke.
as Don said, you could go online, tell them I want $4,000.
Yeah.
They'll send it to you.
Now-
There's no tax for trading.
Now, there
No
is.
cost for trading.
If it's not at Vanguard, though,
Oh, good point.
if it's at
Yeah, if
Schwab,
this is
for
a Vanguard-
example,
What do they charge? We haven't looked that up in a long
I
time.
think it's $75.
Oh, good Lord. So
I do, but I may be wrong. Let's find out.
that is something that really has never ended. I keep expecting it to, but if the
because they make
family doesn't
nothing.
kick back, right? If
Yeah.
they don't give anything back to the custodian, then they say, well, we're going to have to charge you because we're not making anything on this deal. So everybody's got to get paid, I guess, right?
And a few funds kick back to them, but they kick back from their 12B1 fee, which
Exactly.
Vanguard
And
doesn't have.
There's another reason don't exchange
no.
traded funds.
I was so wrong. I think it may have been 75 in the past.
How much now?
It's $0 to sell, $49.95 to buy.
Okay.
That's better. So
this is
on the sell
Vanguard at where?
side, at Schwab.
At Schwab.
At Schwab.
So Ted, so some of this, as Don's correctly pointed out, will depend on the custodian. If the money's custodian at Vanguard, no charge, and you just sell the amount that you want. If it's custodian somewhere else, also no charge. Is what you're saying?
Well, I know that
sell.
at Schwab. I don't know about everybody,
Yeah.
but Schwab
Yeah.
Schwab does not have a sell transaction fee, only a buy transaction fee of $49.95.
But why would you own a Vanguard fund at Schwab? I mean, just go to Vanguard, own it there.
Well, remember back in the day when we were all mutual funds?
Yeah, that's true.
We had dimensional funds, and they don't kick back anything, so they
that
were
was expensive.
they
were
were
charging
transaction fee funds.
remember, I think when we started the firm, we got it down to like $25.
We got it down to $20.
$20. That's right. And
Yeah,
everybody said, how'd you
and
get it down to
other
20?
firms were
'cause
going, how
we
did
know
you
what
get
we're
that
doing.
low?
I
Schwab
know.
would not go that
they
low.
They knew us.
And no,
they
it
knew
was
that we'd be managing a $1.5 billion as we are today from our little office.
they knew that from
said,
our 10 million that we'd be at
I
$1.5 billion.
No, we started with 1 million.
Oh, I thought it was.
I went in the day to give them the paperwork at Schwab. I can remember doing that.
And they said, "Look at that million. If you
no,
did a
they knew
million
us
now."
from Merriman. No, they knew us from Merriman. They knew we were going to
okay.
grow, and they made us a deal. So that's why.
I'm sorry. I thought
Smart
they just
people.
liked you so much.
Oh yeah, that doesn't come into it.
All right, I'm looking at the lines again. Not really, kind of indirectly, and I just don't see anybody calling. So 855-935-TALK is our phone number. Believe me, you want to call.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
I know I'm beating a dead horse, but here's the number again. Sorry,
where does that
horsey.
expression come from?
I guess when
You had the thumb one.
I
you
figured
had all the other
that
ones.
one's easy. Beating a dead horse, that means when you've been riding and you kill your horse and you're like beating it to try to get it up and run again. Yeah, that's beating a dead horse.
Okay.
Of course it is.
Okay.
Of course that's what that means.
I'm just asking.
Think about it. How many Westerns have you seen? You know, and then the horse goes down and the guy's going, get up there behind me. Anyway.
Not the big old Western guy.
What I was going to say is.
I have no idea.
I was going to say the phone number. 855-935-TALK, 855-935-8255. So many investors, just generally, most investors are incredibly fickle. They sort of follow the crowd. Mm-hmm. For a long, long time, all we wanted to be in was the S&P 500. You know, and you didn't want international. You didn't want any of that stuff. You didn't want small companies. They stunk. You didn't want value. Value's underperformed for over a decade. And you certainly didn't want those emerging market stocks, those stinky little things, those little countries that barely do anything except grow like outrageously sometimes. You didn't want those. And we've been saying all along, we're so boring and predictable. Own them all because sometimes they do really, really well and we don't know it in advance.
Yeah, we don't know it in advance. And we don't know what's next.
Right.
So the best place for your money so far this year? Emerging markets.
See, those stinky little emerging markets.
India, China, Brazil, that stuff. Used to be Russia, but we don't own them anymore.
Because they don't have any industry anymore. They don't really have publicly traded much of anything.
God's sakes.
Oil.
Anyway, this is absolutely fascinating to me. So last week, as you may remember, if you're playing from home, the U.S. Supreme Court said on the tariffs, right? Nope, can't do it. Mm-hmm. President can't just check a box and say it's going. So what happened? Well, so that reset tariff policy for all these trading partners, like overnight, right?
Well, yeah, they went from like 75% to 15%.
Right. I know. So that meant that, if I've got money invested in places, the aforementioned India, China, Brazil, et cetera, the future looks much brighter, right? Because, they're not going to have to pay these huge tariffs for the moment. So what happens? $500 million in new cash. They must have been just dancing in the streets at little old Avantis. It was a pretty small fund family. The Avantis Emerging Markets Equity ETF had $500 million in new cash. Now, that doesn't sound like a lot when you look at the industry, but actually, if your fund is $20 billion, that's a pretty significant number, right? Mm-hmm. Because $2 million would be 10%. So you can do that. I mean, it's 2.5% in one day.
No, $2 billion would be 10%.
Pardon me, you're right. It's not 2% one day, but it's still an awful. It sounded better the way I was telling you.
$2 billion is 10%. You're right.
Yeah, 10%.
So $200 million is 2%.
And it was $500 million.
So that's 5%.
5%. It's a lot of money. Yeah. So all this came in, and they also say they call it an actively managed fund, which we could argue about whether it's active or not. We don't have time for all that silliness. But the point is, please stop chasing returns. Don't listen to the new idea because this could all turn around again on Monday when the new tariffs come out, right?
Right. And by the way, this is hysterical. Do you know what the 1 year return for AVEM has been?
It's like 60% or something.
54%.
Yeah. It's crazy.
And so people look at that number and they go, I should get in now. No, you should have been in it a couple of years ago.
Yeah. Do you know where a lot of that return came from? You know the country that's been the best for the last year?
Do not know.
South Korea.
Oh, yeah. South Korea makes sense.
And do you know why? It's for two companies,
chips.
I believe. Samsung
lots
is
and
one
lots
of them.
Of chips.
Yep. That's right. So put your chips on the table and pass them over there.
It's the two big.
It just shows you how fickle. You said fickle. That's the right word. This comes, it goes. It could, especially in our current political environment, it could all change so quickly. But you should always be exposed to emerging markets. It should be somewhere around 10% of your overall, because that's how big it is when you look at the world. But you shouldn't be racing into it Friday, missing the 60% run up in the previous year. You should have been exposed to that all along.
Yeah. Now, this is a curious, interesting fact. What has the emerging markets index done over the past year, 12 months?
I thought you just the fund is
market, the index itself.
And this is not emerging markets value. This is just emerging markets.
Emerging markets.
Wow. I'll say 65.
45. Avantis has been killing
beat their
them
benchmark
by a lot.
That's not their benchmark because they don't manage money that way.
But it's the benchmark.
Yeah, it is.
It's the benchmark.
Anyway, so there you go. So, and they call it the largest actively managed exchange traded fund tracking emerging.
And we
equities.
talked to both Avantis and Dimensional.
They're all going to be at retirement.
We talked to the CEOs of both Avantis and Dimensional, and we said, "Are your funds active?" And they went, "Not really."
No, because active means they're picking companies. Active means they're timing markets. Active means they're going to claim that they know something about tomorrow that you don't know.
David Booth told me, if you come up with a better term, I'll buy you dinner. Because he doesn't
when
it.
He buys dinner, it's nice. That's probably.
I bet David Booth can afford a really nice dinner.
Yeah. They do name the school for him in Chicago, I think, for some donation.
Maybe we can have dinner out in his art gallery yard.
Don't make me publicly comment on that, okay?
You didn't like the art?
I'm just, as I said, please don't make me publicly comment on that.
It's a little
There's a movie where you can go watch it if you want. Just leave it at that.
Anyway. People should watch the movie now that we mentioned it. What was the name of the movie? I forgot.
I forget now. Dimensional movie. It was
good.
Not called
it's available
the
Dimensional
free.
Movie.
No, I know. I was saying that just because I knew you were going to do a search, and it'll come up somehow. Dimensional David Booth movie. Somebody should call us. Call us and tell us.
No, I got it. I got it. Okay. I got it. Tune out the noise. Tune out the noise.
There you go.
It's available on YouTube.
Errol Morris.
It has. Wow.
How many?
It came out 11 months ago.
How many views?
31 million.
That's more than our channel on YouTube. That's crazy.
Yeah, but like about 31 million more.
Right next to it. Very close.
Really close. 855-935-TALK is our phone number. We have a call.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Warning, podcast listeners. Podcast listeners. Yeah. I don't often comment on the commercials that are played during our program that are heard by the live listeners in Seattle.
Sneaking off for a snack. What was it?
Yeah, you went out for a snack. You would have been fuming if you heard the promo for Elevate Your Wealth.
No.
During our show, a show that we do not believe you should listen to. No. We would just as soon you didn't, because we're pretty confident that they're going to try and sell you an indexed annuity.
We know they are. We've had people tell us.
I know. I was hedging a little bit.
No reason to hedge at all.
I got to tell you, the fact that it ran during our show almost becomes an implied endorsement, and I want to make it crystal clear that we don't endorse anything they stand for.
And you can find us on this point, immovable, intractable, I would say even adamantine.
Were you just in the dictionary?
No, that's just how I just when I
that's just how you talk normally.
That's just yeah. I wake up in the morning and those things pour out. Those dime words just come flying out.
Mm-hmm. So, I don't believe you. Although there was an interesting PSA in the break. It was brilliant.
What was
it? Was the small talk PSA. It was brilliant. It was just a deadpan guy going, 2 women meet on a street. Woman 1, it's cold. Woman 2, yeah. Women 1, 47 degrees. Woman 2, more like 45. And that's all I did. Feels like rain. Yeah, it does. And he goes, it was for foster kids. It said, save your small talk for a foster kid. It was, it was clever. 855-935-TALK is our phone number, and we're going back to Seattle again. Lee, welcome to the program.
Hi, guys.
Hi,
Thanks
Lee.
for taking my call.
Glad to do it.
My father's elderly. He just turned 89 this week. And my mom isn't with us anymore. She used to patrol the financial stuff. And I was kind of shocked to go in with him to close a checking account at one of our local brick and mortars. And the gal at the desk turns her monitor around, and Dad's got a $200,000 CD. And he forgets these things, okay? Mm-hmm. And he is also not reachable by whatever cell phone he was using at the time. He loses them, and he grabs another one off the shelf. doesn't have his password for emails. And so they were unable to reach him and rolled it automatically into one account, into something that I think was 8 months, him not being allowed to touch it. We have
wait, I'm going to get you to stop there, Lee, just for a moment. 8 months because maybe he could touch it, but he might.
He would have an
face
interest penalty.
An interest penalty, but because if it's a CD, you can certainly get the money out.
Oh, okay, great. Because we received nothing in snail mail about this.
Yeah.
Nothing in snail mail about it apprising us that he even had this.
Yeah.
And now we have a letter in the mail that says, this is matured and you can do something with it and you have 10 days. I mean, 10 days or what? They're going to roll him into another 1%.
I don't know what that means.
Wait a minute. Okay, let's go back. I kind of got lost in here a little bit. So he has currently, you went into the bank, he has a $200,000 CD and it matures in 8 months. Is that correct?
We've been waiting for these past months, and now here at the end of February, now it is matured.
Mm-hmm.
And so we have an appointment to go in there, and I want to move that money to a Vanguard account. And, of course, the branch manager is trying to keep us in-house.
Mm-hmm.
We have fiduciary people right here.
No, they don't.
And,
they don't. They don't.
Exactly.
They have part-time fiduciaries maybe, but not full-time.
Maybe the guy running compliance there.
Right.
No. They probably, if it's like Bank of America, the Merrill Lynch guys can claim to be a fiduciary at times.
Of course. Yeah.
Because they are at times, and then they're not at other times. So if it's like B of A or or Wells Fargo, they all have brokerage arms where they can claim to be part-time fiduciaries, but they tend not to act as such because to act as such means their commissions and pay go down.
Do you have POA for your father?
Yeah. Payable.
I do not.
POD.
He's a little bit suspicious.
Oh, power of
He thinks
attorney.
I'm gonna, put him into a home. And
All right, here's the deal, Lee. One, my guess is that a CD at a brick and mortar bank doesn't earn much, right?
No,
That's what we see on a regular
Correct.
basis. Yes.
Yeah. So,
I've shown him. Thanks to you guys, that I've learned about brokered CDs that I do at Vanguard all the time.
Yep.
And I've had him sit there and watch me on the computer. See, look at even the lowest offerings of late are 3.5, even on 3 months.
Mm-hmm.
A lot better than one.
You need to march in there with your father, or whatever.
Well, no,
get him,
I don't even know
That's
that
what
she
we're
needs to
gonna
do
do.
that.
or just liquidate.
She could do that.
Oh,
We're doing it.
You go to Vanguard and tell them the money's there. They'll figure
hold on,
that
though.
out.
She's got to make sure that it goes into a savings account and
Well, that's
doesn't
true.
roll into another CD. So that has to happen. That order needs to be given, that it does
so
not
it'll
get
have to
rolled
be-
into a CD.
We have to open an account.
no, I
Either
thought you
that
said
or
he had
you
a checking
liquidate it.
account.
Does he have a checking? He must have a checking account there, right?
Well, we closed it there. It was a checking account that he had with my mother.
Oh.
And
I
we
see.
didn't even know that CD was there. I was just with
All right,
him
then,
closing the checking
it's
account.
it's really easy because he's already had an account and it's not going to cost you anything. Just open a savings account, have that $200,000 go into the savings account. Take the account number from the savings account, give that to Vanguard. They'll bring
move
the
it.
money over.
Yeah, you don't have to do that.
Okay, great.
And then
Okay, we'll do it.
get him a 2 or 3 year ladder of brokered CDs with some short maturities and some
Mm-hmm.
longer ones. Put some in the money market mutual fund
Okay.
Only if he's going to use the money, but yeah.
for money that he might need in the nearer term. But yeah, ladder some CDs out. You're going to get a higher yield, and you're not going to get the runaround from the banks who are trying to shove you to their brokerage division, which is the new modus operandi for banking institutions, because the brokerage side is more profitable than the banking side.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
It is the final weekend before retirement. Before Don jumps on a plane, leaving 85-degree sunny weather in Florida and flying north and west to the misery that is Seattle in March.
And fly. I think you should say that 3 or 4 times. North and west. And north and west. And north. It's a long way. I mean, you got to fly
It's
like
a
3,500 miles.
long,
yeah, it's a long haul.
long
and the weather. I haven't looked.
ride.
What is the prediction?
It's cold. It's 50 and rain. which for you is probably warm.
Oh, yeah, it is warm.
15 rain.
Right now,
But then Monday is
52.
balmy.
Only a 45% chance.
Only 45.
And by the way, here's the really good news about that for you.
Doesn't that mean
Because
like
of
half
you-
the day it rains?
No, because of you,
Yeah.
because how thoughtful I am and caring and loving, the event will be indoors, so you will not face the weather. How about
It's
that?
always indoors
I know,
because
but
no
it's
one
one
in
of those things
Seattle,
you take
even
it for
you
granted.
guys, don't want to face the weather.
Okay, the guy who referees 50
I
games a
don't
year
know
doesn't want
what's
to
wrong
face the
with
weather?
you. I truly do not know what's wrong with you. I don't know what's wrong with you.
At any rate, the roast beef sandwiches will be delicious. The breakfast is good. You didn't promote that enough this year, I think.
I didn't. I usually
Yeah, the
talk about
food.
how good the sandwiches are
I
and
know.
the pastries in the morning. And by the way, their coffee is extraordinary. Their coffee in the morning is so good. Real
so the rest
cream.
of it, whatever.
Real cream. It's so nice.
Don will be there doing the radio show live for those
I
who
will,
like a
if
live.
Tom
we'll
remembers to
mention
bring
our
the tie
special
line.
offer again. If you come after 1, you come free. Hear the broadcast. And what were you going to give them? Just the broadcast, right?
I'm not giving them anything.
I
What
forgot.
do you think?
I
There's
thought
like
there
a
was something else
gift?
through there.
No.
I don't know. Golden microphone or something? I didn't know.
Yeah,
what you
no,
said.
I'm not giving them anything. There's no
Anyway,
present, but you can.
If you'd like to sign up and be an official attendee, retirement.
You got to go, but you got to pay because
And you gotta do
you
it
got to
pretty soon
pay
'cause
because
there's
we
a
got to
few
pay
seats
for
left.
lunch and breakfast. So basically, you're paying for lunch and breakfast.
got to pay for the share of the entire thing's coming out. Pat's going to be here, so we got to pay for whatever he needs.
Pat's got the money.
He fly in on a carpet or something. I don't know what he does.
He's the CEO. He's got
loading
the
up,
money.
Yeah.
More than
anyway,
we
gotta
do.
pay for all that.
We're just his evil minions.
Exactly. So retiremeat.com next Saturday. We'd love to see you. All kidding aside, it's fun.
All right, yeah, and really, really sign up because Tom's feeling bad because it is not sold out
I know.
for the
And a
first
week
time
ahead of
in
time.
15 years.
11 years.
11
well,
years?
I think it's
12 years?
11 here, and then we did a few others.
Oh yeah, we 11 years. Okay, that makes sense. And I want to ask a favor now that is not retire me because I don't care if it's sold out or not. But I do care if I have questions for my Friday Q&A podcasts. And those need to be spoken. Unless, of course, you want to write them and then I'll make AI speak them later. That's the alternative is you're going to end up being AI if you're not careful.
Yeah.
So
You're going to steal the tree ones and start turning those into AI?
they gotta be digital. I can't use the tree ones.
Okay.
They don't go well into a computer. You can't shove a piece of paper into a computer.
It's going to happen.
What
I'm
I was
sure.
getting to is go to talkingrealmoney.com and click on the contact button and record your questions. Send them in. Those will get answered on Friday's podcast. So do that. And the other thing you can do is if you really do need some help, you want somebody to look at your portfolio because you got a hodgepodge or you got a mess. It's very confusing. It's very frustrating. And you want somebody to look at it and give you an honest opinion who's not going to try and sell you something at no cost or obligation. Go to talkingrealmoney.com and click on the button that says Meet an Advisor.
The opinions and views expressed in this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor.
Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services.
Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit talkingrealmoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.